The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. The U.S. Senate has recently passed the Genius Act, marking a landmark step toward establishing the first federal framework for dollar-pegged stablecoins. Now, this legislation aims to bring clear regulatory oversight to an asset class that now processes over $28 trillion in annual transaction volume, surpassing major payment networks like MasterCard and Visa. At the same time, the Clarity Act is moving forward to resolve a long-standing debate over which regulator, either the SEC or the CFTC, should govern different types of crypto assets. Now, these efforts signal a potential turning point in how digital assets are regulated and could have significant implications for innovation, investment, and global regulatory momentum. And to help unpack what these developments mean for the crypto industry and investors, joining us today is Hassan Ahmed, who is the country director for Singapore at Coinbase. Hi, Hassan. Welcome to the show.
Hello. Thanks for having me on.
Thank you so much for joining us. Well, Hassan, the U.S. Senate just passed the Genius Act, a move in creating the first federal framework for dollar-pegged stablecoins. Help us explain what this act actually covers and why it's such a big deal for the crypto industry.
Stablecoins are a big deal, and I think everyone should pay attention to them now because they're moving from fringe to core financial infrastructure, which will soon touch the payments and financial services lives of billions of consumers around the world. The Genius Act itself is a comprehensive piece of legislation in the United States that creates clear rules for the road for how stablecoins should be issued, backed, and regulated. It sets standards in place so that stablecoins are transparent and trustworthy. And part of the reason why this is so interesting at this time is if you trace the arc of regulatory history of crypto in the United States, we've basically gone from an anti-crypto administration and a fairly hostile regulator to a president that really wants the U.S. to be the leader in innovation in both digital assets and AI. And the weight that Washington is now putting behind the passage of this bill to create regulatory clarity is also a very monumental and part of the reason why this is a big deal, that the U.S. crypto industry can take a firm step forward from where the regime had been.
Well, the Genius Act puts the U.S. Treasury in charge of stablecoin oversight and allows a wide range of entities, including banks, fintechs, and even retailers, to issue stablecoins. Now, stablecoins clear over $28 trillion in volume annually, more than MasterCard and Visa combined. So from your perspective here, how does this reshape the playing field for stablecoin investments?
Yes, I think we're about to see an explosion of innovation and participation in this field as a result of this act, which will hopefully be enshrined into law fairly soon. What we're seeing across the board is that financial services players, retailers, big tech companies are all waking up to the potential of stablecoins. Now that regulatory uncertainty looks to be going away, many are already announcing or progressing their plans to experiment in this field. Just to point to some examples, in the last few weeks alone, JP Morgan announced that they're launching what's known as tokenized deposits on Base, which is a public blockchain network incubated by Coinbase. Shopify announced their partnership to accept USDC with Coinbase and Stripe. And more than that, even Walmart and Amazon did almost like a dual announcement that they are both considering issuing their own stablecoins as well, which actually many believe caused the Visa stock price to dip by 3-4%. So it's really to say that what we're going to see is this progression from just what we would consider crypto native players to mainstream platforms and mainstream players coming in at a very fast pace.
Well, then, does this increased regulation mean stablecoins remain a compelling asset to invest in, or does the new framework change the risk-reward balance in any way?
It materially changes the balance in our view. So one of the big risk factors for this industry as a whole has always been what's known as regulatory risk. And that's sort of this notion that until you have clear rules of the road and clear frameworks for how to operate as an industry, there's always a chance that, perhaps a less friendly administration or agency could stymie the field, over a period of time. So what this will do is it will significantly reduce, in our view, the regulatory risk associated with both this technology and the products and services built on top, and then allow for, long-term players to do long-term investments and bets on launching stablecoins and, using them in their core financial infrastructure.
But do you foresee any risks emerging, for example, from, over-centralization or uneven implementation across issuer types?
Yes, I think this is an early field still, and I think we're still going to see what it looks like a new scale. So, for instance, Citi put out a forecast recently that they expect that stablecoins could go from 240 billion in supply today to as big as 3.7 trillion by the end of the decade. That really gets you into a different stratosphere. And, as the industry grows, we will see where, some of the newer kind of risks come out. But today, where we see the biggest, risk factor really is around just having more transparency and sound reserve management behind some of the largest stablecoins. And what we see is with the passage of this bill, and hopefully other jurisdictions will follow suit, that it will create harmonization for what a soundly regulated stablecoin at scale looks like.
Okay. Well, with the U.S. finally moving forward on stablecoin regulation, what effect do you think this will have on global regulatory momentum, particularly in regions like Asia, where frameworks are already developing?
Yeah, this is, I think, where it gets a little more nuanced. For regulators that, I've personally spoken with, I think they're all keenly monitoring the passage of this bill and just the direction of travel for the growth of stablecoins as a whole. And there are active conversations across major financial hubs to develop similar, what I would call fit-for-purpose stablecoin frameworks. So definitely what I do see is that there is going to be more attention and hopefully just more clarity in a consistent way across many of these geos, within Asia. One concern, though, that I think many different jurisdictions will have to think about is the rise or the growth of what I would call, dollar dominance across the world as a result of USD-backed stablecoins. And that in itself can have its own, profound implications for what we consider the world order today.
Right. I mean, Hong Kong has already advanced stablecoin regulations, for example. So how would you compare the pace and clarity of U.S. regulatory efforts to what we're already seeing in Asia?
Yeah, no, Hong Kong is making a lot of strides in providing frameworks both for crypto overall and then for stablecoin specifically. But it may surprise some listeners that actually Singapore already has a stablecoin framework as well. The MAS issued what they're calling a single currency stablecoin licensing framework last year. And there's already players that have that license. So we do see a lot of hubs in Asia that are moving quite quickly towards this race.
Okay. Then do you expect countries in the APEC region to align more closely with the U.S. approach now that this bill has passed in the Senate?
Yeah, I think the big message here is that all different hubs and geos are waking up to the fact that crypto is not only going away, but it is a wonderful innovation and breakthrough that can really help them advance their own policy goals towards financial inclusion, sound financial infrastructure, prudential reserve management. And so I think they're taking into account the fact that, the U.S. is making this monumental shift, not just for stablecoins, but for crypto overall, and taking that into account their own broad, not just regulatory, but political support for crypto as well.
Well, alongside the Genius Act, we're seeing progress on the Clarity Act as well, which, tackles the long-standing confusion over whether crypto assets fall under the SEC or the CFTC. Why is this such a critical issue for the industry? Is there consensus within the industry on what types of assets should fall under which regulator?
This is more of a technical topic and a different part of crypto. That's to do with stablecoins. But it did have profound impact, on the industry, but not in a good way. It created sort of these chilling effects for digital asset issuers, for crypto exchanges and distributors, in the sense that without knowing how to classify a crypto asset, they were left in the dark as to what kind of regime it would fall under and what principles to adhere to. Many times, Coinbase and many other crypto companies in good faith went to the SEC and CFTC under the previous administration saying, hey, give us the clear kind of rules of the road and, what we need to do. And we will gladly invest the compliance cost to make that happen. But we did not receive guidance. And instead, we received a regulation by enforcement.
Okay.
So that turf war, I would say, really got in the way of the actual innovation and the product work. But that is now sort of hopefully going away with this Clarity Act, which will then, enshrine again in law at what stage of digital assets, life cycle, is it a security, and then when might it transition to a commodity?
Well, from an investor perspective, then, how transformative is this kind of regulatory clarity? Will it influence risk assessments or capital flow decisions?
It already has. So even, as some of the signals since this last U.S. election of the White House wanting to be a leader in the space and, taking very proactive steps even outside of legislation to support the industry. The broader, private sector has taken notice and are starting to pivot their plans towards blockchain. So along with, some of the examples that I mentioned recently, what we expect is, as more and more clarity comes our way, clarity effectively means more opportunity for technology and capital and job creation. We think that, as people think about, hey, how do I upgrade my financial infrastructure and the financial system to make it work for more businesses, institutions, and consumers, we expect to see a tremendous unlock of capital and resourcing heading in this direction.
Well, if the Clarity Act does become a law, what impact do you expect it to have on investor behavior and market dynamics?
Yeah, so some of the areas, where we are excited about is, one, just having an understanding of, which regulator to work with and what regime to follow. I think this reduces legal and compliance costs overall, allows for more products and services to be built. I think it also allows for the next frontier of innovation to get unlocked. So one big theme that is really interesting is around tokenized securities and tokenized equities. So that is something that is already in play in Europe. But there are plans, I think, in the U.S. to introduce something on those lines as well, to be able to trade securities on-chain. And that will allow for just more access to more instruments and for more nuanced portfolio construction as well. I think even, around all of that, what we're also seeing is for wealth management firms and financial advisors have now started recommending a more kind of balanced portfolio allocation, which does include digital assets, within alternative assets. Ultimately, it depends on everyone's individual risk preferences and time horizon. We are seeing opportunity is that you can improve your portfolio construction and Sharpe ratio by having certain kinds of digital assets in your portfolio.
Okay. And before we let you go here, Hassan, in light of these new regulatory developments, how does Coinbase see its role evolving to support this move, both in the U.S. and across the APAC region?
We're a pure play crypto company, and our mission is to really increase economic freedom around the world through the power of blockchain. So we have been, big supporters and builders from day one. For Asia, Singapore is our APAC hub. We hold a major payments institute license from the MAS to provide secure and easy-to-use services for Singapore and beyond. And for the next phase, what we're really excited about is to add more utility on top of blockchain and crypto assets. So we are looking at use cases like payments, treasury management, being able to serve small businesses by moving money easier and cheaper around the world. So that's probably where the next phase of Coinbase's growth to support this industry will be headed towards.
Some great insights from you there. Thank you so much, Hassan, for joining me today.
Thanks for having me.
Thank you. That was Hassan Ahmed, who is the country director for Singapore at Coinbase. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.